so the other day or yesterday, we went through a broken wing butterfly scenario with the P&Ls here. This is a little bit different of a setup because now in an Iron Condor, we have two sales. We have the sale of a call spread, the sale of a put spread. So what we can see here, okay, we're selling the downside put spread, excuse me, selling the upside call spread. And we're trying to collect $2.50. So we have two short options here. You know, normally when we talk about, okay, where do we want a stock to go? And it's always the short strike. Here we have two short strikes. Okay, those short strikes being 465 on the downside, 490 on the upside. So as we'll see as we pop in the numbers here, the values, anywhere in this range, 465 to 490, both of the spreads, the put spread and the call spread, will both expire worthless if we're there at expiration. So that's going to be our max profit areas, anywhere between 465 and 490. Outside of that, we'll start to give back some profits. And you'll see as we go through the values here, we'll see what our break-even points are and what our maximum potential loss is. Okay, regardless of what happens here, guys, whether the stock went to 0 or 1,000, what is the maximum value of this Iron Condor? Not our max P&L, but what is the maximum value of the Iron Condor? Anybody? Nope, not 250, Gene. If the stock went to 0, what would this position be worth? There you go, George. Either one of these spreads could be worth $5. They both can't have value at the same time at expiration. So if one is worth 5 at expiration, the other one's going to be worth 0. So $5 is the max value. $2.50 then would be the max potential loss. Okay, does everybody see that? We're going to populate the values here, but does everybody kind of understand that conceptually? Okay, great. All right, let's populate the numbers here, and we'll see that anywhere below 460 would be a max loss to the downside. And I see I have a little bit of a typo here. Okay, so there we go. At 445, we're going to see something similar. 450, same thing. 455, same thing. And at 460, we're going to see the same thing. So as I said, 460 or below at expiration would be a max loss. As we start to climb back into that zone we had just talked about, we're going to start making some money back. So at 461, we have a loss of $1.50, and then our break even to the downside would be at 462.50. Does everybody see that? Because at 462.50, the put spread's worth $2.50, call spread 0. We sold it for 2.5. It's worth 2.5. Washes out. Okay, does everybody understand that? Okay, great. Now, we start moving higher than that. What's going to happen? We start making some money. Okay, so right here, we start getting profitable. And then if we get to that short strike, boom, right there, That's where our max profit's going to be. And anywhere, again, anywhere at all between this short strike all the way up to this short strike, all of the options at expiration are worth 0. So it would be the same maximum P&L there. Does everybody see that? Thank you, Jeffrey. Okay, does everybody see that? All right, great. Carrie, thank you. Okay, now we're going to see the same pattern on the upside as we saw on the downside. Once we hit that short strike, if now we start to move a little bit higher than that, okay, we're going to start giving back some profits. And just like Jeff posted in the room just now, and just as we went through the calculation for the break even on the downside, so we had short strike, subtract our credit, that gets us to our break even. On the upside, if we take our short strike and add in the credit, that will take us to our break even. And then anything above that, we're going to start losing some money, with the maximum pain, the maximum loss being the same on the upside, $2.50. Does everybody follow this? So again, for those of you new to trading this type of strategy in Iron Condor, and I mentioned this yesterday, there's all these fancy names, right? There's all these fancy names for different types of option spreads. But an Iron Condor, all it is, if you just break it down to its easiest, most basic format, all it is a short put spread and a short call spread. Now, we could also do it from the long side, right, where we buy it. We 99% of the time will do it on the sell side because we're looking for this range. Yep, 2 short verticals. Gary, you got it. Okay, so I want to make sure everybody understands what the concept of an Iron Condor is and what we look for to happen there, and then also the mechanics of it. And if we were to graph the P&L of this, and I'll put the P&L graph up here in a second, what you're going to see is something that looks like this. Okay, so let's actually graph that now. And there it is, especially if I move this all the way up to expiration. Okay, that's exactly the shape that it is a bell curve, Tim, because the profit area, okay, the profit area here, okay, is right in between the short strikes. And if we happen to move outside of those short strikes, that's where the potential loss comes in. Okay, so I always find, and you guys can let me know, I always find it's very helpful to visualize something like this as well, as opposed to just thinking about in your head, what do you want to happen? Awesome, Robert. If it stayed between the short strikes, no, Gene, it's very rare. It's very rare we'll hold it all the way. We would probably take some of it off, take some profits off the table. And then, listen, if we were sitting right at 475, 480, smack dab in the middle, and we're a day or two before expiration, sure, we're gonna let it go a little bit. But more than likely, we would not hold this till expiration. Actually, Pamela, nobody got in. Nobody got in. But if we do get back up to the range, it's certainly valid again. I really thought we were all going to get filled there. Honestly, I thought we were going to see fills above 250, but didn't happen. So certainly not chasing it, but it will be valid if the stock rallies and comes back into our range. It will be valid. Okay. Any questions on this, folks? Carrie, you're very welcome. All right, let me post this up in the room. I'll get the video and I will get this spreadsheet posted up in the room. Let's save this guy here. Four 1,724. Okay. All right. Is the S at yes, Ernest? It will be. I'm going to post it up there in just a moment as soon as we finish, and it will be in the doc folder. And it's posted up in the doc folder as an Excel file purposely so you guys can access it. And you can modify, you can do whatever you want to it. Okay? You are very welcome.